You're watching Silver News Daily. Subscribe for more.
Imagine silver hitting new record highs, and you've missed the chance to capitalize. Sounds crazy, right? But what if I told you that silver has never been in a stronger position? And one of the world's top market analysts, David Morgan, believes now is the time to double down before it's too late. In today's video, we'll uncover the critical factors pushing silver toward unprecedented highs. And trust me, you don't want to miss out on this opportunity.
Third leg of a major secular bull market, the pause phase was extremely painful and a lot longer duration than I ever expected it to be. But nonetheless, we have started the third leg up. The run to gold has begun, as I've said on your, podcast and many others, that, starts off rather stealthily, where, just the central banks are buying more gold than they have in times past, which is taking place. And then more and more institutional types will come in, and then, pension funds and hedge funds, and then individuals and wealth managers will be pushing them clients into gold, and, on it goes until we get a lot of momentum. We're not there yet, but the process has begun. So where do we end the end of the year in gold? Again, I don't know for sure, but it wouldn't surprise me to see something in the 2650, maybe 2700. Will it get to 3,000 by end of the year? It could. I think for that to happen, we've got to see something big, like some problem with the U.S. election, or election maybe in another country. Some, unfortunately, maybe escalation in the war, some asymmetric, something that happens in the war. And I'm talking the Middle East and Ukraine and, Taiwan, who knows? So, but to get $500 more in this year on gold is a bit of a stretch in my view, but certainly can happen. But the point is that we don't really have to fear trading from the long side for both the metals, which doesn't mean you can be blasé about it. If you buy and hold, you can be pretty calm about it. But if you're trading, you want to pick your entry points very carefully and keep stops tight, and realize that even in a big bull market, even in the last phase, which is usually the most rewarding, that there will be some significant pullbacks and some times where you doubt that the market's going higher, that maybe it's peaked, and climbing that wall of worry. So that's where we are.
As we look at the silver market right now, it might seem like prices are relatively stagnant, hovering just above $30 an ounce. But beneath the surface, there's a perfect storm brewing. Analysts are saying silver is severely undervalued when compared to its true potential, and we're already seeing signs of an imminent surge. One of the key drivers, demand from China's booming tech and renewable energy sectors. Just last June and July, China's silver imports doubled to over 400 tons per month, a staggering number that's already straining global supply. But it's not just China's appetite pushing this market forward. We're also seeing a critical imbalance in supply and demand. Global production just can't keep up, and the gap is widening. When supply starts to tighten in this way, prices don't just inch up, they explode. It's the exact scenario that David Morgan has been warning about, and if you're thinking about sitting this one out, you might want to reconsider.
Point in the COT right now where that's pretty ugly, meaning that the professionals, are ready to get taken by the banks. I think the problem with the COT is it's very accurate as far as the trend shift is going to take place. It's inaccurate as far as duration. As soon as you get into this zone, is it going to be a week, a month, 2 months, sometimes 3 months before it actually flips that direction? Well, we're in a caution area right now. If you're trading right now, I would take profits, over the next, short duration, maybe be early. But no, it doesn't look good structurally for gold right now. Again, well, David, last week you said it looked good in gold's, $100 higher. Are you out of your mind? No, I'm not. But these are zones. So we're in what would be called the selling zone on a trading basis. Again, how long it will take, we don't know.
China's silver imports are making waves in the global market. And this isn't just about raw numbers. This is about a tectonic shift in demand. Over the past few months, China has imported over 400 tons of silver per month, doubling last year's average. Now, why is this important? It's because China isn't just buying silver for storage or investment. They are consuming it. China's tech and renewable energy sectors, particularly solar panel manufacturing, are devouring silver at an unprecedented rate. This surge in demand is what we call a demand shock, where one player in the market starts consuming so much of a commodity that it shakes up the entire global supply chain. And the global silver supply is already tight. In fact, analysts are warning of the possibility of a silver squeeze, where demand vastly outstrips supply. Silver is a key component in many essential industries, and China is not the only country hungry for it. This supply squeeze could push prices to levels we haven't seen before. David Morgan has been vocal about this, predicting that China's demand could be the tipping point that sends silver prices skyrocketing. The question is, when this squeeze hits, will you be prepared, or will you be left watching from the sidelines as prices surge?
It's a question. First of all, before the election, I'll say it's over 30. After the election, depending who gets in, I'd say if the Democrat gets in, it'll be $2 to $3 higher. If Republicans get in, it may be more a lower move, like stay around the 30 level, kind of hug that level. There is a bit of a correspondence between who's elected. Once the illness happened, we saw that big sell-off in silver. We got about 120, 125 to 1, the gold-silver ratio. I was lucky enough to buy within a couple of days to the bottom. And then it shot back up. And then after Trump left and Democrats got in, a lot of people, well, after Trump got in, basically, a lot of people just sort of gave up buying their precious metals. It's like, well, someone's in the White House that's going to fix everything for us. And that's my strong belief that's incorrect. You really have to, feed your family first. You can't depend on any political figure to solve, problems that are personal. I mean, your personal finances are your personal finances. So now the correlation is being Democrats usually pushes it higher, faster.
But it seems like long term, what you're saying, there's not much impact.
In the long run, it doesn't make any difference. In the short term, it can.
But it's not just China's demand alone that's driving silver's rise. Silver's role in industrial applications is what really sets it apart from other precious metals. Unlike gold, which is primarily an investment asset, silver has a massive industrial footprint. Let's talk about solar panels, for example. Silver is a key element in photovoltaic cells, which are the heart of solar energy technology. Every single solar panel produced uses silver, and as the world pushes towards renewable energy, the demand for solar panels, and therefore silver, is accelerating at a pace that's hard to keep up with. According to the World Silver Survey, nearly half of all silver demand comes from industrial uses, particularly in tech and energy sectors. It's essential for producing electronics, medical equipment, and even the very devices you're watching this on. As governments across the globe ramp up their green energy initiatives, including ambitious solar projects, the demand for silver is only going to intensify. In fact, some experts predict that silver demand from the photovoltaic industry alone could increase by 20% year on year. David Morgan highlights this as one of the most compelling reasons why silver's future is looking brighter than ever. It's not just speculation. It's built into the very fabric of our evolving technological landscape. The industrial reliance on silver makes it far more than a safe haven asset. It's a commodity in critical demand.
One is that the cost of mining platinum is greater than the spot price in a lot of cases. Item number 2 is it's 15 times rarer than gold. Item number 3 is 70% comes from South Africa, and they've really got problems down there, not only politically, but also with electricity, with power. And of course, mining is very dependent on power. And then the last one I put in the last video had to do with the hydrogen economy. Who knows if that'll ever come about or not? Certainly there's work being done in that sector. and it demands platinum if it's coming to fruition. And even if it doesn't come to fruition, there'll be a lot of experimentation around that hydrogen economy and using platinum. So it's a lot of bullish factors lining up. It's certainly been a laggard. And, I've heard one of the stalwarts in our industry, CEO of a very major royalty or streaming company. And I've heard this a lot from a lot of the stalwarts that, gold always leads and silver always lags, and it, catches up. It goes back and forth. But when I was trading futures for a living, I mean, my broker, my third one was extremely good. And first thing he said to me, really, once we made a connection, was the whites lead the yellow. And in those days, it did. Platinum, palladium, and silver actually usually advanced before gold did. And if you look back to the last big move in the metals from 2009, the crisis, up to 2011, the last peak, silver peaked April 30th, May 1st, and gold didn't peak until September of that year. So, I mean, that's a pretty good example of silver leading gold. It peaked before gold. And anyway, I'm not trying to make a case out of it. I'm just saying that my stance has changed. The whites don't always lead the yellow, and the yellow doesn't always lead the whites. That's what's happening right now, and I can confirm that. But as things go further, we'll just see. There'll be a back and forth. Regardless, I think it's probably the most undervalued metal. Of course, I'm biased. I've been accumulating the platinum sector now for several months, and it really hasn't done anything. I did add to my silver position even at these lofty prices because I just didn't see anything out there that looked as good. We got that pretty big smash down around 27. I got in around that point. I'm up $2, which if your leverage it can be significant.
One of the most overlooked indicators in the precious metals market is the gold-silver ratio. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold, and right now, it's sitting at historically high levels. To give you some context, the gold-silver ratio is currently hovering around 80 to 1. Historically, when this ratio gets this high, it's a sign that silver is undervalued compared to gold. Let's look at past trends. Whenever the ratio has exceeded 80, silver is followed with massive rallies as the market corrects itself. In the 2008 financial crisis, we saw this ratio hit 84.50, followed by silver skyrocketing by nearly 400% over the next 3 years. Silver surged from $9.70 to almost $50 per ounce during that period. Right now, we're in a similar situation. Gold has outperformed silver recently, but that's exactly why David Morgan and other experts are urging silver stackers to pay attention. When this ratio eventually corrects, silver could see explosive gains as it catches up to gold. So, while gold has already made headlines with its record highs, silver is quietly setting the stage for its own breakout moment. This isn't just speculation. It's a historical pattern that repeats itself time and again. Are we on the brink of another silver rally? If the gold-silver ratio is anything to go by, the answer could be yes. And the question is whether you'll take advantage of it before the market catches on.
Shortly after, it's inevitable in my view. I mean, there's never been a fiat currency that hasn't collapsed, and that doesn't mean absolute zero, and it doesn't even mean non-acceptance. I mean, in Venezuela, you can get pictures on the internet of currency in the gutters because no one's bothering to pick it up. It's so worthless. That happened in Zimbabwe. I don't think the dollar will ever get to that level, but I do think that the currency crisis will demand an implementation of reset. And no one, to my knowledge, knows exactly how that looks. Do you readjust the interest rates on the bonds or the duration, how they're paid off? Do you say, look, we're reneging on our bond payments. You're going to get 70 cents on the dollar. We're going to close it out. Or the worst case is the currency crisis, where the currency starts to move so rapidly to the depreciation level that people just shun it and you pay off all these bondholders with almost worthless currency. Again, I don't think that will happen, but I don't think the powers that be really know. I think it's more likely that they'll renege on the payment of the bonds. Uh, if you're a foreign holder, we're not going to pay you. Look what they did to Russia. I mean, it's already been done in a way with Russia when they had those billions in the bank, and the United States put sanctions on them and made their deposit null and void. They've done it to Russia. So could they do it to China? Yes. Could they do it to another foreign country? Yes. Could they do it to an institution or a bank? Yes. Once they do that, then it's game over, and you better have something in place that can replace it, and it better be trusted by the people. So it's a very scary time in a way. It's happened again and again in history. So like, oh my goodness, this is the first time ever. No, it's happened again and again. It's just the first time it's really happened on a global basis. Normally it's, Venezuela, it's Zimbabwe, it's Turkey, it's Argentina. It's a country, and not that those people don't suffer greatly. They do. But in this case, it would be probably a worldwide situation, which would obviously make it very difficult for international trade, foreign currency adjustments, and everything else.
Now let's shift our focus to another critical factor driving the silver market, the U.S. dollar. As many of you know, silver and the U.S. dollar have a historically inverse relationship. When the dollar weakens, silver tends to rise. Right now, the dollar has been showing signs of strength, putting downward pressure on silver prices. But here's the thing. Many experts believe that the dollar's recent strength is temporary, and we could be on the verge of a significant reversal. Why? It all comes down to the Federal Reserve and its shifting policies. The Fed has been signaling the possibility of interest rate cuts, with a 6 to 5% chance that they'll reduce rates by 50 basis points. When that happens, the dollar is likely to weaken. In fact, every time the Fed cuts rates, it puts downward pressure on the dollar, making commodities like silver more attractive to investors. On top of that, inflation in the U.S. is showing signs of cooling, which further suggests that the era of a strong dollar could be coming to an end. Now, why does this matter for silver? When the dollar weakens, investors start flocking to hard assets like silver as a hedge against currency devaluation. David Morgan and other market analysts have pointed out that a softer dollar could be the key catalyst to reignite a major rally in silver. This isn't just about the price of silver ticking up. It's about silver becoming a go-safe haven for investors looking to protect their wealth as the dollar declines. So, if the dollar is on the verge of weakening, silver could be primed for a massive move upward. The smart money is already watching these signals, and the question is, will you be ready when the shift happens?
Check quickly. I mean, perhaps this BRICS alliance could mitigate the problem somewhat, and all those currencies that are aligned with the BRICS agree to keep trading each other's currencies. That's a possibility. I won't rule that out. If it's a savior or not, I would say no. There's just too much based on the US dollar for that to mitigate the whole problem. I mean, it's sort of like, I can't think of a really good analogy, but running out of food supply, but you have, stockpiled and seen it coming. And so you got a month's supply worth of food. So you get a month further down the road. But for the international settlements market to have the dollar not be used because of a default one way or the other, I think it'd still take down even the BRICS. That's my opinion, but that's how I see it.
Let's talk about one of the most overlooked but powerful drivers of silver's price: global geopolitical tensions. Historically, whenever there's instability in the world, investors flock to safe haven assets like silver and gold to protect their wealth. And right now, we're living in a time of heightened uncertainty. From escalating tensions in the Middle East to North Korean missile tests, the geopolitical landscape is becoming increasingly unpredictable. Each of these events adds fuel to an already volatile global environment, and when uncertainty spikes, so does demand for silver. Why silver, you might ask? It's not just because silver is a precious metal. Its unique properties make it more versatile than gold. Silver is a hedge against both currency instability and economic turmoil, making it an ideal asset for uncertain times. Investors are turning to silver not just to protect their wealth from inflation or market volatility, but also from geopolitical crises that could affect global currencies and economies. David Morgan and other analysts have emphasized that silver's safe haven appeal is often underestimated, and when combined with rising industrial demand, this creates a powerful dual narrative for why silver is poised for major growth. We've seen it time and again when geopolitical risks rise, so does the price of silver. In fact, during past crises, silver has outperformed many other assets, including gold. As global tensions continue to rise, silver could once again become a key refuge for investors. The real question here is, are you prepared to take advantage of silver's safe haven status before the next big crisis hits?
Both it's industrial mainly. I'll get to the investment side in a second, but we put this in our paid service, and you can find it on the internet. But India is creating the largest solar farm in the world. It's going to take up the same amount of space as Paris, France. So think about Paris, France, then expand your mind and think of that whole area is filled with solar panels. That's a lot of silver. And then China is the number one manufacturer of solar. So they need the silver to manufacture solar. Moving on the investment side, I mean, until India became wealthier on a per capita basis, most of the population bought silver to store their wealth because they've had centuries of currency abuse. So they know if they're going to put any savings away, not to do it in the currency, to do it in metal. So silver was really the metal of choice or default because gold was just too expensive for much of the population. That's changed over the last decade or more. So a lot of them go to gold, have it, but silver's still there in the background and still used for the same purpose. On China, they really were pretty much gold only as well for a long time. And recently, with their banking crisis, their real estate crisis, they're looking at both metals. And as most of our viewers know, there's been a big discrepancy between the Shanghai Gold Exchange price of silver and the COMEX or London price of silver. So the retail investment in silver in China has actually picked up rather measurable.
Now, let's talk about a scenario that could send silver prices soaring to levels we haven't seen in years, the potential for a silver squeeze. If you've been following the silver market closely, you've probably heard whispers about this. A silver squeeze happens when demand for silver skyrockets, but the available supply just can't keep up. And right now, we're closer to this tipping point than ever before. Here's why. Industrial demand for silver is booming, particularly in sectors like renewable energy and technology, where silver is a critical component. But at the same time, global silver production has been struggling to keep pace. According to recent data, global silver production has stagnated, and some experts are warning that we could face significant shortages in the near future. This imbalance between soaring demand and tightening supply is exactly what leads to a squeeze. The last time we saw a squeeze of this magnitude was back in 2011, when silver prices nearly touched $1.50 per ounce. David Morgan and other top analysts are now warning that we could see history repeat itself. With China alone consuming record amounts of silver and industries like solar energy demanding even more, the global market is stretched thin. And when supply can't meet demand, prices tend to explode. But here's the kicker. While industrial demand is surging, the investment community is also waking up to silver's potential. If investors start buying up physical silver in large quantities, we could see an even more dramatic squeeze. The question isn't if a silver squeeze will happen, it's when. And when it does, will you be in a position to benefit from what could be one of the biggest price rallies in silver's history?
Talking about the whole interview, it's going to be more stress on the system, and the currency is going to be worth less and less over time. You might get bits and spurts where it looks better, or looks stronger, or, as superior to the yen or the yen ratio. Gold even comes back down. But overall, the trend's very clear. I think the analogy here is very good. I mean, if you're on a massive ship, it's very hard to turn it around. You're at the wheel and you're turning it to change things, and you're trying to change it. Momentum's keeping you going. Well, in this case, the wheel comes off and you hand it to your partner, and he can play with the wheel all he wants. The ship's going where it's going. I think that's where we're at now. You can play with that wheel all you want. It's not really going to make much of a difference. But the propaganda and the mainstream news and, what's said about gold as a pet rock and, silver people are wacky or weird or all that, you'll probably hear that kind of rhetoric. But the market itself will continue to move higher because it is a safe haven worldwide. Gold is recognized universally, silver as well, not as much as gold at this current time, but nonetheless it is. So that's it. I want to say two more things. I watched a Kitco interview with Matt Watson and Mike Dorenzo of the Silver Institute, and a couple of real important points. One, I know them both, and they've both been very, helpful to me over different periods of time. Matt said, current, things change, but at the current rate of consumption of silver, we've got about 4 years above ground supply, which is more aggressive than me. I've said 5 or maybe 6, And then we talked about the inevitability of the price going higher. And then Mike talked about.
Now, let's talk about a scenario that could send silver prices soaring to levels we haven't seen in years, the potential for a silver squeeze. If you've been following the silver market closely, you've probably heard whispers about this. A silver squeeze happens when demand for silver skyrockets, but the available supply just can't keep up. And right now, we're closer to this tipping point than ever before. Here's why. Industrial demand for silver is booming, particularly in sectors like renewable energy and technology, where silver is a critical component. But at the same time, global silver production has been struggling to keep pace. According to recent data, global silver production has stagnated, and some experts are warning that we could face significant shortages in the near future. This imbalance between soaring demand and tightening supply is exactly what leads to a squeeze. The last time we saw a squeeze of this magnitude was back in 2011, when silver prices nearly touched $1.50 per ounce. David Morgan and other top analysts are now warning that we could see history repeat itself. With China alone consuming record amounts of silver and industries like solar energy demanding even more, the global market is stretched thin. And when supply can't meet demand, prices tend to explode. But here's the kicker. While industrial demand is surging, the investment community is also waking up to silver's potential. If investors start buying up physical silver in large quantities, we could see an even more dramatic squeeze. The question isn't if a silver squeeze will happen, it's when. And when it does, will you be in a position to benefit from what could be one of the biggest price rallies in silver's history?
About several research papers that they're going to put out on the silver market going forward for different aspects of the silver market, not just solar, but this battery aspect that has been floating around silver investors. I made an update for our premium members, and I'll just say I call the Silver Institute because I'm pretty familiar with the Samsung story that actually surfaced several years ago, and there wasn't really proof of it. And talking to Mike, I don't want to say too much, and I hate being wrong, but I'm not afraid to take a risk. The story seems like it's been a little overblown. He did tell me, this is verbal, that the Silver Institute, will put out some sort of, I'll call it a press release. He didn't really name it, speaking to that topic. So I'm being a little conservative here, but nonetheless, even without that being as purported with 20% a kilo per car and all that's said in that writing, you don't need that. it'd be nice, and I'm not against seeing it, but I just think it's inaccurate. My point being is that with that going away 100%, still doesn't change the main trajectory like we talked about on the money supply. There's too many forces moving in silver's favor from this point forward, unless something that arises I can't see at this point in time or whatever. So, 4-year supply, industrial demand completely increasing, and then the investing community coming back in the silver market, looking at it as a safe haven asset rather. Sorry. So I see good things ahead for silver. I'm getting pretty excited, and also pretty weathered in this precious metals arena. I've been there, done that many, many times, but nonetheless, it'd be nice to finish strong, and I think we will.
We've covered a lot of ground today, from China's surging demand, the tightening global supply, the weakening dollar, to the looming threat of a silver squeeze. All the signs are pointing in one direction. Silver is on the verge of something historic. David Morgan and other experts have laid out a clear case. Silver has never been in a stronger position, and the forces at play could send prices skyrocketing. The fundamentals are undeniable. Industrial demand continues to rise, especially from the solar and tech sectors, and global supply is struggling to keep pace. On top of that, geopolitical uncertainty and a potentially weaker U.S. dollar are creating the perfect storm for a silver rally. But here's the bottom line. Waiting for silver prices to explode could mean missing out on the opportunity of a lifetime. We've seen this story before. The last time these conditions aligned, silver shot up nearly 400%, and the investors who recognized the signs early reaped the rewards. Today, you're faced with the same opportunity. Will you act on it? This is not financial advice, but the evidence is clear. All the factors we've discussed are converging, and silver could very well break through to new highs. Whether it's $1.50, $1.65, or even higher, the potential for massive gains is right in front of us. If you've ever thought about going all in on silver, now might be the time to make your move. And before we wrap up, make sure to subscribe to stay informed about the latest in silver and market trends. You don't want to miss what's coming next.